In response to an Oxfam report that says the poorer half of India's population pays 2/3 of the goods and services tax, GST, collected by the government, while the richest 10% account for just 3 to 4% of GST collections, the government has highlighted another statistic. 90% of the GST collected comes from just 22% of GST payers, comprising large businesses with a turnover above 50 crore rupees. Two factors are intertwined in this. The first is the source from which the tax is collected, and the second is who actually bears the burden of the levy. The simple fact that the bulk of the collection is from a little over a fifth of taxpayers does not in any way contradict the claim that the bulk of the indirect tax burden is borne by the poorer half of the population. In this video, let us learn more about who pays GST. Whether transparently billed or not, consumers pay GST, a consumption tax. The GST mechanism is great because only the consumer pays tax on a product or service. The supply chain of accretive value leading to the product or service has no cascading tax. Or at least that would have been the case if all goods and services had been brought under GST. The transport cost that gets built into the taxed price already includes non-GST levies, so exempting fuel from the value-added tax has caused cascading tax. The consumer still pays taxes. Businesses pay the government, while consumers pay the tax. India has over 6 crore enterprises producing goods and services, and only 1.35 crore are registered with the GST network. Of these, about 15 lakh are composition taxpayers, meaning small players, with turnovers less than 75 lakh rupees, 50 lakh rupees in some states, who do not keep track of individual transactions and pay tax as a proportion of gross revenue every quarter. Now, the finance minister has revealed that, of these registered taxpayers, about a fifth pay 90% of the tax. What this means is that in addition to bringing ever larger numbers of productive enterprises under GST, even if under the composition scheme, efforts must be made to ensure that more of the registered taxpayers pay tax regularly. Greater use of the reverse charge mechanism may be the solution. When a large supplier sells to a small buyer, he charges GST, collects it and pays it to the government, while also collecting whatever input tax credit is due. The system of the buyer paying the GST chargeable on the purchase directly to the government, instead of paying it to the seller and expecting the seller to pay it to the government after claiming input tax credit, is called reverse charge. Reverse charge spares small players the paperwork of collecting GST and paying it to the government. Greater use of the reverse charge mechanism could induce more small operators to become regular payers of GST.